Yo, what's up, guys? Mr. Solution here. How are you doing? How's the trading journey been? How's the experience been? How are you maximizing the bull season? I hope you are all making judicious use of the opportunity. I hope none of you has been liquidated. Of course, it's part of the game, but just make sure you don't get liquidated to the extent that coming back again into trading would be a very difficult task for you. Okay, so manage your risk, trade very well, be very conscious of your downside more than you are of your upside. Okay, so welcome to this very episode, and today we'll be looking at how to combine multiple time frames to carry out your trading, how you can combine different time frames before you can arrive at a decision as whether to buy, to sell, or to stay and not do anything. Alright, please note that whatever information I'm sharing here is for entertainment purpose. Please, I am not a financial advisor. I am not a financial advisor. I have never been one, and I don't carry myself as one. So please take whatever thing it is you be learning here with a pinch of salt, scrutinize it, question it, try it on your own to know if truly it is true. Okay, because no man is infallible. Okay, I do not know it all, and I do not brag as one that does know it all. Okay, so in case you have any question, any concern you want us to talk about, anything you want me to clear you on as regards cryptocurrency trading, anything about cryptocurrency trading, spot futures, whatever thing it is, you can always reach me through my social media channels. This is my WhatsApp contact. I am online 24/7. WhatsApp is basically my office, and then this is my Twitter. Occasionally I share insight there, I share information there, so you can reach me through any of these social media channels, and then I'll be happy to have you around. And then if you're looking for a community of traders where you can learn things, understand technical analysis, which I occasionally drop, and maybe you're looking for where you can be getting free signals, okay, you can join my Telegram channel. I'll be dropping the link at the description section of the video. Alright, so let's proceed. How to combine multiple time frames in trading crypto. So these are the things we'll be looking at. Firstly, we consider what multiple time frame is. We look at how to determine candlestick formations in HTF. HTF actually means high time frame. Okay, so we also look at the mistakes to avoid when you're trying to combine the multiple time frames, and then we look at factor of 4 to 6. That's what I call factor of 4 to 6. And then finally, we look at what to focus on in the higher time frames. Okay, so these are the things we'll be considering as we go ahead. Alright, so first of all, multiple time frame defined. What is multiple time frame, or how do you define multiple time frame? So simply, I've defined the multiple time frame as the process of combining various time intervals before making a trading decision. Of course, sometimes when you look at a chart, maybe you look at 1 hour chart and it's telling you to buy, and then you look at the daily chart or maybe a 4-hour chart, and then it's telling you that the market is dumping, that the market is going down, or the market is dropping. You know, getting this kind of thing normally leaves you askance. You'll be confused as what to do. So this is why I'm putting this course together, so that you know how you can properly combine these various time frames, so that you don't, keep getting confused as whether you should buy or not buy. Okay, so how do you determine candlestick formations in higher time frame? All right, from one of my studies, though it actually took me a couple of time, it took me time to learn this, that you can actually combine two lower time frames together, and then when you combine these two lower time frames together, you can get what a higher time frame should be. You can get an idea of what the higher time frame should look like. Okay, so let me share with us how you can combine two lower time frames to get a higher time frame. All right, so assuming we have two candles here, we have candle A and candle B, each of which is 1 hour. Okay, so both of them are all 1 hour. Okay, so let's say we have candle A here. This is candle A, this is candle A. Okay, and then normally a candle would have upper wick, though not all, but just a typical candle should have an upper wick and then a lower wick. Okay, so we also have the open and close. So let's say this is the open, okay, and then this is the close. So by extension, by our knowledge of candlestick patterns or candlestick morphology, we know that whenever a candle closes lower than it opened, we should be, that candle is automatically a bearish candle. So that being the case, this is actually a bearish candle. So let's color this place red because it's actually a bearish candle. Let's color it red. Okay, this is red. So what it means is that this candle is actually what? This candle is actually bearish. Because why? Because it closed lower than it opened. It opened at this point, then closed it. So that automatically makes it what? Makes it a bearish candle. Okay. Then we have another candle here. Let me change this color to probably let me change it to blue or light blue sort of. Okay. So we have these here. We have the second candle, which is this. Okay, we have this one. Okay, we have the second candle. Okay, like this. Please don't mind it. This, you know, I'm using freehand. This is a freehand sketch, so don't expect it to be that beautiful and all that. Okay, so the upper wick, the lower wick, and of course we should have the open and the close. So let's just say this is the close, and then this is the open. So because it actually closed higher than it opened, so this automatically makes it what? Makes it a bearish candle. Bearish candles are candles that close lower than they opened. So here we should be having green. Okay, let's just color that place green. Let's change the color to green. Okay, this is green. This is green. Right, this is green. Okay, so the upper wick and the lower wick, we have the open and then we have the close. That's for, remember I said each of these candles represents 1 hour. So this candle is seen in 1 hour chart. This one is for 1 hour. Okay, this one is for another 1 hour. Okay, so you can actually combine these two candles together to get an overview or an insight as to what the higher time frame, that's the 2 hour candle, would look like. How do you do that? First of all, you take the high of these two candles, the highest point of these two candles. That's the highest point between candle 1. Okay, let me label it candle A. This candle A. Okay, this is candle B. Wow, sounds like Cardi B. Candle B, Cardi B. All right, funny. So this is candle A, and then this is candle B. All right, so to get the high of the higher time frame, so we are now trying to get the 2 hour. We want to know what the 2 hour candle will look like. Okay, we want to know what it will look like. So to do that, we take the high between these two, between the A and B. The highest point between both of them would be this, would be here. So this is the highest point. So you kind of trace it, trace the line. Okay, trace the line sort of. Okay, so we have the high here. This is the high, and then you take the low, the lowest point between these two candles. Okay, remember please, it necessarily mustn't be this. Just if this one is lower, you should take the low. If this one is still higher, you should take that. Just know that you're taking the highest point between the two, and then you're also taking the lowest point between the two, and then which is the lowest point? This is actually the lowest point. So we still do what we did initially, you know, kind of trace it. Okay, trace it, and that's here now. Okay, so that's the low, and then you take the open of the first candle. This is the first candle. Okay, candle A. You take the open of candle A, which is the first candle, and that open will be the open of your higher time frame candle. In other words, it will be the open of the 2 hour candle. So we still trace it. Okay, we should have something like this, open. Okay, so we should have something like this. This is the open, if I'm correct. So this is the open. Okay, then you now take the close of the second candle. This is the close, this is the second candle. So we are actually taking the close of this. You still trace it. Okay, still trace it. Okay, up to this very point. Okay, so once that is done, what else do? You now join everything together. You join this. Okay, join this. Okay, connect the lower wick, okay, connect the upper wick, okay. So remember, this is our open, this is our open here, right? Yeah, the first is our open, okay, this is our open, and then this is our close, this is our close. So when a candle closes lower than it opened, what do we have? We have a bearish candle. So this candle is definitely a bearish candle. So in other words, the 2-hour candle is bearish. So let's just proceed to color this red. Okay, so have you seen how you can combine two lower time frame candles to get an idea or an insight into what the higher time frame candle will look like? It's very simple. It might look complex, but if you go through this video over again, you can, try it out and then see the simplicity in it. It actually took me time to figure this out, but once I did, it has really helped me. Okay, it has really helped me in extrapolating data and knowing what the higher time frame will probably look like. Okay, so this is actually how you can combine two lower time frame candles to get an idea of what the higher time frame candle would look like. Okay, so let me erase this and as we proceed. Okay, all right, I hope that's very clear. Hope that's clear enough. You can still go through the video to rewatch it for a proper understanding. All right, so let's proceed. So the thing is, the next topic we'll be looking at is the mistakes to avoid whenever you're trying to analyze charts. Whenever you're trying to analyze different time frames, there are two mistakes you need to avoid. And one mistake is that you do not need to zoom out too little. That's one of the things people do. You need to make sure that you are having as maybe a minimum of, let's say, 100 to 100 to 150 candles in your chart. Okay, so don't zoom out too little. Okay, so make sure your chart is representing as much candle as possible, minimum of 100. Okay, what that helps you to do is it gives you a broader view. Okay, it gives you an insight of what the general chart is like. Okay, so you don't need to zoom out too little. Make sure you have a minimum of 100 candles on your chart, okay, before deciding or before analyzing. And then secondly, do not zoom out too much. Okay, when you zoom out too much, you might be led into looking into some things that you're not supposed to look at. Okay, if you're trading for this year, your trade is for this year, for this month of February, so to say, you have no business looking at. It's not really that you have no business, but you shouldn't really concern yourself with what happened in 2016, 2015 and all of that. You don't need to concern yourself with that. So that's why we said you don't need to zoom out too much. Okay, so make sure that your candlesticks are not lowly represented, and make sure they are not overtly represented. Okay, so don't zoom out too little and don't zoom out too much. So make sure you have an equal balance, okay, between the depth you can zoom into and then the much, okay, you can zoom out of. So make sure that your charts and your candles are well represented. Okay, so these are the two mistakes you need to avoid whenever you're trying to analyze different time frames. Okay, so what to focus on in the higher time frame? We've already talked about. We've said that the lower time frame helps you to basically what the lower time frame does is that it helps you to know when to take a position, but then the higher time frame kind of gives you insights, okay, into what to expect. Okay, so what do you focus on in the higher time frame? You've done your analysis on the lower time frame and now you're going into the higher time frame. So what do you focus on? Here I said trade with the current swing of the higher time frame. We're still gonna go into the practical aspect of it, but just get this theory consolidated in your mind. You trade with the current swing of the higher time frame, and then you focus only on it and not the overall picture. It will tell you what to do on the lower time frame that you're trading, assuming you're actually trading, your lower time frame is 15 minutes, okay, and then you want to use 1 hour as your higher time frame. You're not really concerned with the general setup, the general outlook of the higher time frame. You're only looking at the current swing of that higher time frame. Okay, you can monitor the general setup of the lower time frame. But once you switch to the higher time frame, you only concerned with the current swing. Okay, we'll still go to the practical aspect of the, but just understand that in the lower time frame you are only looking at the current swing, but in the higher time frame, in the lower time frame, please, you are looking at the general setup, but in the higher time frame you're looking at only the current swing, because the lower time frame actually gives you an insight or an idea as to when at what point to enter the trade. Okay, so let's proceed. All right, so before we finalize, let's look at the practical aspect of all these things we've talked about. So we'll be using FTS exchange, which is my number one exchange so far. I've been using them for a very long time and they've been serving me, okay, because of their low fee, low withdrawal fee, low transaction rate and all that. FTS is actually my number one exchange. And if you're watching this video, you up until now you do not have an account with FTS, I am sorry but not sorry, because you're leaving enough plenty opportunities on the table. So kindly check the description section of this video and make sure you register an account with FTS using my registration link. Okay, so this is REN perpetual features. Okay, this is actually, okay, a trade I was in, okay, earlier this morning. I traded this earlier this morning. Okay, so this is a chart I did, an analysis I did, sort of. I just didn't do much. I just drew the support and resistance and all that. Okay, so I was able to take few trades before I left it for my Sunday service. All right, so now remember, we are trying to combine different time frames. We're trying to combine multiple time frames, and then assuming that what I'm using now is the 15 minutes time frame, which is my lower time frame. Okay, so what it means is that I'm going to analyze these charts. This chart as it is now. Okay, so the lower, I'm using 15 minutes as my lower time frame. So having done that, and then I want to, I've already spotted my resistance and my support, so this gives me an insight as to where to enter and where to exit. If I'm to take this trade, I've already known that this market is actually approaching the support level. And what do we do as support? Of course we buy, but remember, you don't just outrightly buy. Okay, don't just really buy, wait for some confirmations. Okay, maybe I could see a bullish engulfing candle forming. If I see the bullish engulfing candle forming, it would give me, okay, it will tell me that, oh, okay, I should just go right ahead and take the trade. Because why? Because bullish engulfing candle usually signals a reversal in the fall. Okay, it signals a reversal. If a coin was falling and you see a bullish engulfing candle forming, it means that chart is about to reverse. That trade is about to reverse, to start going up. But even at that, looking at what has been happening here, looking at this channel, so to say, we've seen what has been happening. Okay, it's been come to the support, go up, hit the resistance, come back and all that. So this is actually a very good insight for me. It's just forget about what happened there. We saw this fake out, but what happened next? Of course, there was a rapid rejection and it just got back to the channel immediately. Okay, so that being the case, we've done this analysis on the 15 minutes time frame. Now let's use higher time frame, which should be 1 hour. Okay, let's use the 1 hour, which should be our higher time frame. Please, before that, we skipped one part, which is how you can combine, okay, how you can combine different time frames as to decide which of them that will work for you. I'll use the idea shared by Alexander Elder, one of the traders I listen to, one of the traders I respect, and one of the traders I've read so much about, and I love his trading pattern. Okay, so now this is the higher time frame, which is our 1 hour. Remember what we said in our higher time frame? We said whenever you are trying to combine two different time frames and you've seen your lower time frame and then you go to the higher time frame, what you should do is that you focus only on the current swing of the higher time frame. This is actually the general setup of the market. We are not concerned about this, we are not worried about this. We are only looking at the current swing. Okay, and what is the current swing of this market? Of course, it is coming down. Okay, it's bearish, so this is the current swing. Okay, this last candle formation, this is the current swing. We are not looking at this, we are not looking, this is the current swing you want to focus on. So what is the current swing telling us? It's telling us that this market is coming down. Okay, so because the higher time frame is telling us that the market is coming down, we wouldn't really be in a haste to get in. Okay, so what we do is that since we've identified, see it's still dropping, so since we've identified the current swing of the market, which is that the market is going down, we now go back to our lower time frame, which is what, 15 minutes. Okay, go back to our lower time frame, okay, and still monitor things, see as things unfold. We've already identified our supports here. See how it reacts to this very support. Okay, will it get bounced, or will it kind of break through the support and start going down? So this thing will give us an idea as to what to do. We've already identified that this actually, okay, generally this trend is bullish, the setup generally is bullish, but we want to know what is actually happening here. This is it. We want to know what is happening here. This market has been trending for some time after getting to this very top and then going down, and then it started forming this channel. So this is actually a channel. This market is ranging. This is a ranging market. So currently it's ranging. It's not really going up, it's not going down. So because it's a ranging market, that's why it has ended up forming this channel. Okay, so we want to really know if this channel will be maintained, or maybe there will be a rejection and all that. So we have to wait. Trading is actually a process of transferring money from the patient to the impatient, from the impatient to the patient. Okay, so one of the virtues you must inculcate in yourself as a trader is being patient. You need to wait. Okay, so we have to wait to see how this candle react to this very well. So we don't want to jump in, because looking at the higher time frame already, okay, looking at the higher time frame and the current swing at the current trend, we see that it's going down. So we are not in a haste to jump in now. So we need to go to the lower time frame and still wait to see how it reacts to the very support. Okay, so this is how you do that. We can also take another market. Let me use BTC, which is a popular coin everybody knows. BTC, let me look at BTC chart, BTC perpetuals. Okay, now we analyze it with 1 hour and also look at it with 15 minutes time frame. 1 hour being our higher time frame, and the 15 minutes being our lower time frame. Okay, so having this, okay, I could just simply draw my support and resistance. Okay, horizontal lines, horizontal support and resistance and all that. Okay, I could simply draw it, spot this one, and then I have this one as well. Okay, have this one as well. So looking at this, okay, maybe I'm too far. I could just bring it closer. Let me focus on what is happening in there now. Okay, so let me focus on it. Okay, so that being the case, we see that in the 15 minutes time frame, it actually hits this resistance, and then there is a rejection. What is probably it could hit here and start going up, but we are not sure. So as it stands now, we are not taking any entry. Okay, we've seen that market is actually going down, and then we go to our higher time frame, which is the 1 hour. Look at the 1 hour time frame, and then remember, what do you do in the higher time frame? You focus only on the current swing. And so what is the current swing? Is still going down. Okay, going down, probably gonna hit this support here. We do not know. So what do? We wait. Okay, so then we go to the lower time frame again. Lower time frame is where we definitely get our entry. So we wait to see how it reacts to this very support, or to see if eventually it will reverse here, probably go above the resistance, go above the resistance. If you definitely hit, crosses above this resistance, you don't need to be in a haste to enter. You need to see how it reacts, because most of the time resistance gets, it could go above the resistance and get rejected. This was what happened here. Look at it here. You see, we thought it had actually gone above the resistance. What happened next? There was a rejection. Okay, it couldn't close boldly above it. It's kind of rejected and it's coming down. Okay, so this is how you combine different time frames. Okay, so then I'll be sharing with you guys my method for combining these time frames, as I learned from one of the people I listened to. His name is Alexander Elder. Okay, I think we kind of skipped it, right? So I will go back to that part. I will go back to the factor of 4 to 6. I kind of skipped it. I don't know what happened, but I skipped it. Okay, this factor of 4 to 6 will help you know or determine how to combine the different time frames. Okay, for instance, just as we used in our example, if you're trading off the 15 minutes time frame, your higher time frame has to be 1 hour. The question arises, how do we know that 1 hour should be our higher time frame? Follow me. How many minutes are there in 1 hour? Of course, there are 15 minutes. There are 60 minutes actually. So you convert 1 hour to minutes. Converting 1 hour to minutes will give you what? 60 minutes. Now, when you divide 60 minutes by 15 minutes, what would you get? You get 4. Okay. So what it means is that what the factor of 4 to 6 simply means is that the result you get when you divide your lower time frame by your higher time frame should be in the range of 4, 5 or 6. It shouldn't be higher than 4, 5 or 6, and it shouldn't be lower than 4, 5 or 6. So make sure it's within this range. Make sure that it's either 4, 5 or 6. If it goes above it, you are overstepping. If it goes below it, you are not maximizing, you are not using it very well. So make sure that when you divide your lower time frame by your higher time frame, you should get either 4, 5 or 6. So that is how the factor of 4 to 6 came about. So if you convert 1 hour to minutes, we will have what? 60 minutes. When you divide 60 by 50, you have 60 by 15, you have 4. So assuming now you want to, let's say we are using 15 minutes as our lower time frame, and then we want to probably use 2 hours as our higher time frame. Now if you convert 2 hours to minutes, what will you get? You will get 120. Now when you divide 120 by 15, 120 minutes divided by 15 should be giving you what? Should be giving you 8. So it's wrong. So you can't use 15 minutes as your lower time frame and then use 2 hours as your higher time frame. Is wrong because it goes against the factor of 4 to 6. It goes against the 4 to 6 factor. Now let's come back to the 1 hour. Of course, when you divide 4 by 1, you would be getting 1. So in other words, the 4 hour is good for our higher time frame if you're using 1 hour as your lower time frame. Now let's just still take 3 hours. If you're using 3 hours, divide 3 by 1, you would be getting 3. So it's not good. But if there is anything like 5 hours or 6 hours, so what it means is that this 5 hours and the 6 hours can equally serve as your higher time frame according to the factor of 4 to 6. Because if you divide 5 by 1, you get 5. If you divide 6 by 1, you get 6. Okay, so that's how you do this for the 4 hours. 4 hour, you can use, if you're using 4 hour as your lower time frame, you have to use the daily. That's the daily candle as your higher time frame. How? There are 24 hours in a day. So you need to convert this daily to hours. How many hours are there in a day? There are 24 hours. So if you convert the daily to hours, you have 24, and 24 divided by 4 will give you what? 6. Have you seen why we said that the best higher time frame for someone that is trading off 4 hours, his lower time frame is the daily? So the same thing applies to daily. If you're using daily as your lower time frame, your higher time frame should be weekly. How? There are 7 days in a week. Basically, there are 5 trading days in the conventional trading market, like forex and the rest of them. We have Monday, Tuesday, Wednesday, Thursday, Friday. I do not know if Saturday is included. Sunday is out. I'm very, very sure of that. But assuming there is maybe 6 days, maybe you have Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. That's 6 days. So what it basically means is that we have 6 days or 5 days here. So if you divide the daily if you divide the last one by 4, you would be getting, by 5 please, you'll be getting what? You'll be getting 5, which is still within the 4 to 6 factor. The same thing also is applicable to the monthly. If you're using weekly, weekly, that's 1 week. How many weeks are there in a month? There are 4 weeks in a month. If you divide 1 by 4, you should be getting what? If you divide 4 by 1 please, you'll be getting 4. So that's why the weekly is the best fit for the monthly is the best fit for your weekly time frame if you're trying to know the best higher time frame to use. So please, I hope this thing is very simple. And one thing you must always do is that make sure that each of them are each of these time frame, that means both your higher time frame and your lower time frame, are in the same time. You can't just combine we can't use 15 minutes and then you're using daily or just hour like that. You need to convert it to minutes, and then divide it to know if you give you from 4, 5 or 6. So make sure they are all on the same unit. Minute to minute, minute to minute, hour to hour, daily to daily, weekly to weekly, sort of. So make sure that you're converting everything back to okay, the same unit as the lower time frame. Okay, so that you know if you divide you can get the best result. Okay, so this is simply how to combine the various time frames. I hope this has been very insightful and educative enough. So guys, thank you so much for making out time to come watch this video. And remember, like I said, if you have any question bothering you about cryptocurrency trading, okay, you can reach me, you can contact me. My social media links, I'll be leaving them at the description section of the video. So guys, thank you so much for doing this with me, and then I will see you in the subsequent episode. Ciao.